the Your Credit Matters segment today, being brought to you by rsrdebtfree.com. rsrdebtfree.com. Hey, I got it right this time, Josh. I can actually read the screen where you put it right in front of me. What is rsrdebtfree.com? Well, we help you get out from financial stress. And I don't know whether you need to do a debt consolidation loan because your household blended interest rate is always significantly higher than your mortgage rate, but most people like to keep them in separate buckets. Or do you need to get put in touch with one of the services that we talk about that helps negotiate your debts and get the payments down for you? Two different tools, two different services. rsrdebtfree.com, rsrdebtfree.com. What is the Savers Credit and how does it work? Savers Credit can give you an extra incentive to save for the future by lowering your taxes, and if you contribute to your retirement account. And although you have to make most tax moves before the end of the year, this one is an exception. Again, check with your CPA. You might be able to qualify if you make a last-minute contribution to an IRA before filing your tax return. What is the Savers Credit? Savers Credit, or Retirement Savings Contributions Credit, is a federal tax credit that you may be able to claim if you make contributions to an eligible tax-advantaged retirement plan or ABLE account. The Savers Credit is worth up to $1,000 or $2,000 if you're married and filed jointly. The amount you receive depends on your contributions, tax filing status, and adjusted gross income. Unlike tax deductions, a tax credit can save you money on a dollar-for-dollar basis. For example, a $1,000 tax deduction lowers your taxable income by $1,000, and you might save $220 if you're in the 22% tax bracket. But a $1,000 tax credit can save you the entire $1,000. However, the Savers Credit is non-refundable, which means it can only lower your tax bill. It won't increase your tax refund if you don't owe anything. How to qualify for the Savers Credit? You can claim the Savers Credit when you file your tax return if you meet the qualification requirements and make eligible contributions. Basic requirements for the Savers Credit. There are several basic requirements that you have to meet to qualify for the Savers Credit. You got to be at least 18 years old. No one can claim you as a dependent on their tax return. You cannot have been a full-time student during 5 or more months. Additionally, you have to contribute to at least one of the following types of tax-advantaged accounts: an ABLE account, Roth or traditional IRA, employer-sponsored retirement plans such as a 401k or 403b. If you file jointly with your spouse, only one of you needs to be eligible and contribute to claim the credit. However, you might receive a larger tax credit if you're both eligible and contribute. Income requirements for the Savers Credit: in addition to the basic eligibility and contribution requirements, your eligibility and the credit's value depend on your AGI, or adjusted gross income, and tax filing status. For the 2023 tax year, you can claim the Savers Credit if your AGI is at or below $73,000 for a married filed jointly, $54,750 head of household, $36,500 is the other statuses. Those amounts increase to $76,500, $57,375, and $38,250 respectively for the 2024 tax year. We're filing taxes right now for 2023. Your credit will be worth 10%, 20%, or 50% of your eligible contributions depending on your AGI. For example, if you contributed $2,000 for the 2023 tax year, you might receive a credit worth $200, $400, or $1,000. The IRS's website has charts that show you the various AGI cutoff points. You claim the Savers Credit using Form 8880, which asks about your contributions, filing status, and AGI. If you're using tax preparation software, the software may actually automatically fill out the form and claim the credit for you if you qualify. You can review your tax return before filing to double check. If you qualify for the Savers Credit, you also likely qualify to use tax-free preparation software that's part of the IRS free file program. Alternatively, you may be able to get free assistance preparing and filing your tax return from an IRS certified volunteer who is part of the Volunteer Income Tax Assistance, VITA, or Tax Counseling for the Elderly, TCE programs. Do not forget last minute contributions can help you save. You generally need to make tax advantage account contributions by December 31. But IRA contributions are an exception, and the deadline is the tax filing date of the following year. For example, you can make 2023 year IRA contributions through April 15th, 2024. With this in mind, you can start preparing your tax return to find your AGI and see if you'll qualify for the Savers Credit. If you do, and you haven't maxed out your IRA contributions for the year, you might want to make an additional contribution if it will qualify you for a larger credit. Traditional IRA contributions also might lower your AGI, so if you're on the cusp of qualifying, a contribution might help qualify you for the Savers Credit and decrease your overall taxable income. Plus, you can invest the money in your IRA for your future self. It's a win-win-win. That is the Your Credit Matters segment, brought to you by rsrdebtfree.com, rsrdebtfree.com.